India is a very wide market. It's very important that the investment cycle in India revives. We are in a market where the economy is becoming broad-based. No high return comes without high risk.
True.
That is the ultimate truth. I'm more focused on where are the opportunities, where is the valuation, where can we make money.
Hi everyone. Today we have with us Mr. Rahul Singh, who is CIO of Tata Mutual Funds. He has got over 25 years of experience in the industry. By qualification, he is IIT Bombay graduate. He is also an alumnus of IIM Lucknow. It's our pleasure to welcome Rahul at our Dhan studio. Rahul, thank you so much for taking your time out from your busy schedule. So today we'll have a lot of interesting discussions about mutual fund industry, about your experience, how you see the Indian economy growing, and there will be a lot of interesting stuff out there. And also, we'd like to understand something on your personal side as well. So let's get started then. So Rahul, my first question to you is: you are in the industry for almost 25 years. You have been on the research side. You are also on the mutual fund side now. So how you have seen over this last the journey of India over this last 25 years, and how you see the mutual fund industries growing from here on.
Thank you, first of all, very much for having me here on the show. You're right that we have seen many cycles in India. I have seen personally many cycles in India. We had this very interesting period of 2000 to 2002 when the tech boom was happening.
Yeah.
Then we had the infrastructure boom. Then we had the fallout of that and the slowdown between 2010 to 2020 when different sectors did well.
Right.
And now we are seeing a completely different market. The good thing about India, before we get into what we are thinking of the future,
Yeah.
is that India is a very wide market. So
Right.
at various points of time, there is something or the other which is going well. Of course, now we are looking at a period when a lot of things are going well. There is a term Goldilocks you would have heard, where the economy is not too hot, not too cold. I would stretch that term Goldilocks to geopolitics and the other tailwinds which India is having today. And those are also adding to the fact that not only the banking sector is strong, the corporate sector balance sheets are strong. Geopolitics is supporting more manufacturing investments into India. We are seeing smaller companies which were not doing so well on the manufacturing space now suddenly getting a lift in terms of the potential for export markets. And it's very important that the investment cycle in India revives. The best periods for economic growth in India were 2005 to 8 or 2004 to 8, when India grew at 9%. And that is the time when the investment part of GDP was growing at 15-16%. So unless that part revives to say 10-12%, we are not going to get 6-7% sustainable GDP growth. And that is what is I would say the single most exciting thing which is happening today. Not only the private sector capex reviving, government is doing its bit, and now the real estate is reviving. So all the three parts of investment cycle are reviving, and that personally, I have not seen this happen. At least for a long time. For the last 1.5 decades, I have not seen this happen.
Yeah.
So this is a very, very important and interesting development. And good thing is that there will be cycles. Real estate will have a cycle.
Yeah.
But as long as the government is focused on creating infrastructure, as long as the private sector is getting involved in the investment cycle, and not only because of domestic demand, but because of the export demand, I think that is important. We've had a traditional period where the exports have been only for services and pharma, effectively. Now we are seeing the potential of that. Can we have the same thing happening in manufacturing for the next 5 to 10 years? So these are very, very, I would say, exciting and interesting thoughts, which I think is not just thought, but these actually we are seeing first-hand evidence. When we meet companies, we actually feel this, in a lot of companies. So therefore, so two thoughts from that, from a mutual fund perspective, because that was also your question. is that I think obviously there is great scope for diversified funds to do well in such an environment when so many parts of the economy are doing well. There is great scope for manufacturing. There's great scope for small and mid cap, and also for active funds in general versus passive to outperform. These are some of the 3-4 trends I would say. And of course, if the economy grows at 6-7%, nominal GDP growth rate is at 9-10%, earnings profitability might grow at 12-13%. Markets have a good chance of giving similar returns CAGR at the index level for the next 4 to 5 years. And if that happens, then you will have the investments into equities getting supported, and I think whatever growth we are seeing in the AUM for the mutual fund industry, I think that trajectory will continue.
Wonderful. I think as we were talking earlier, before this, that we are at the sweetest spot now as a nation, right? A country where the majority of the population is young. We are one of the largest countries where the English speaking nation, right? So and our the whole demographic advantage is for India now. And also, if we are seeing, the kind of foreign relations we have developed, India had never seen this kind of foreign relations. They can put their foot down and speak in any of the strategic decisions which going around in the world. Right? So, given all this kind of confidence which we are seeing as a nation, and that is also getting reflected in terms of mutual fund investments, right? So, our SIP book is almost 17,500 crores. How do you see this growing? Is it like are we at the beginning of this a bigger trend, or just to ask you something different is, do you see this number growing from 17,000 to 25,000 crores, or do you see some break coming anywhere in the journey? And if that happens, what could be the triggers for that?
No, it's a good question, because sometimes in our excitement about all the positive things, we do forget that equity markets have their own risk. Right now, the challenge is, or rather the most interesting thing is that we are not seeing too many risks. The domestic risks have reduced. The global risks still remain. I think the only thing I would worry about is that the global risk, whether from geopolitics or from crude prices or from a financial accident somewhere in the US. If the interest rates, today we are expecting interest rates to come down, but if the inflation trajectory moves up, interest rates move up, can it create a dislocation in the financial markets in the US or globally, which will have a ripple-off effect on the Indian markets? We are doing well as an economy. We are stronger than we were in 2008. So we can cope up. As an economy, we can cope up better this time, I think. But as a market, we are still connected to the world.
Correct.
So this connection to the world, let us not forget that it is still there.
Okay.
But the SIP book will keep growing. I mean, whatever we are seeing, at least in our organization, our mutual fund, and elsewhere also. And also the fact that fintechs are now playing a big role in popularizing mutual funds as a category. We are seeing good traction from both the traditional channels as well as fintech. And I think it's become more acceptable. I think AMFI has done a great job in popularizing SIP. And I think that's something which I don't see too many risks to the SIP number. But obviously, the pace of which can slow down a little bit, the pace of growth, and then it'll again pick up. Over a 3 to 5 year, I'm less worried, but over a 1 year period, difficult to say, because as I said, the global risks are still very much there. Just because the markets have done well, let us not forget that part. When and how it will play out and whether it will play out is not something which one can take a call, but one just needs to be conscious of it. And there are ways to tackle it. I mean, as investors, I keep advising that you should have your asset allocation in the right place. Should not go out of whack with what your risk appetite is or what your needs are. I mean, if you're a 20-year-old, then yes, be 100% in equities. But if you are 40, 50-year-old, you take a call and depending on your needs. So I think there's ways to manage these risks. So I think investors just need to be conscious of that and not get too carried away.
Yeah. No, that's nice. So, coming to the asset allocation part, or the global headwinds which we are about to see, or which we are presuming that may happen. For any retail investor, right, these all terms becomes very heavy. Recession kya hai, what's happening in US and all. For them, it becomes very difficult to assess or to comprehend, the impact of it. Just to put it in a layman term, if assuming that something goes wrong in US, or there are repercussions, or there are something wrong happening in the Western world, that our markets will also get impacted. It's quite natural. For an investor, for a guy who has continued his SIP, maybe he would have just started. For them, is there a reason to worry? Because I'm asking you because you have seen a long journey, right? You have more than 2 decades of experience. You have seen couple of cycles where the market has been from boom to bust. What piece of advice you would give it to them? क्या करना चाहिए? से अगर रिसेशन आता है, मार्केट सिनेरियो खराब होता है, in that scenario.
See, firstly, if you look at the current scenario, because I've seen 3-4 cycles of bull run and then correction, 2-3 चीजें अभी different हैं. एक तो ये कि typically a bull run, when it becomes a bubble, is what you have to be careful about. Essentially, that's what I'm saying.
So just sorry to interrupt. Are you seeing a bubble now?
No, I'm not seeing a bubble. That is what I was coming at. I'm not seeing a bubble because the actual fundamental improvements which the economy is going through is also, you have to remember that is also leading to the markets doing well. At any point of time, there are bubble in 1 or 2 stocks or 4 or 5 stocks. We are not talking about that. We are talking about the overall bubble. तो वो मुझे नहीं दिखता है. उसके 2-3 रीजंस हैं. एक तो हमारी अगर वैल्यूएशन देखें निफ्टी, तो हम लोग PE मल्टीपल अभी रफली 20 टाइम्स PE मल्टीपल पे चल रहे हैं 1 ईयर फॉरवर्ड. एक्सपेंसिव है, बट वी हैव गॉन टू 22-23 टाइम्स ऑल्सो. नंबर 1. नंबर 2, जब बबल होती है तो यू ऑल्सो गेट सम रियली बैड क्वालिटी IPOs जिन पे आप ट्रस्ट नहीं कर सकते हो, या तो मैनेजमेंट पे ट्रस्ट नहीं कर सकते हो, या बिजनेस पे ट्रस्ट नहीं कर सकते. आई एम नॉट सीइंग दैट. The quality of IPOs have been decent. You can argue कि हाँ वैल्यूएशन थोड़ा कम होता तो अच्छा होता है, या ज़्यादा नहीं होना चाहिए. लेकिन quality of companies and businesses which are coming for IPO are right now very good, I would say. And the third thing is that we are seeing a scenario where US में, for example, एक soft landing की expectation है that there will be no recession and rate cuts होंगे धीरे धीरे होंगे. Chances are good that will happen. So we have to watch all these 2-3 things to judge whether we are how close we are to a bubble. And that is when you need to be conscious. But at the same time, I would say that if you are in an SIP, you tend to worry less. If you are 100% into small cap SIP, I'll worry more. But if you are diversified into, say, a large cap, other mid cap, 1 or 2 thematics, I would worry less. So when I say asset allocation is not just कि equity में कितना है, debt में कितना. It is also about within equity आपके पास क्या है. आप diversified हैं कि नहीं है. थोड़ा diversification जरूरी है. And I think that will also protect you from any such shocks which happen. And as and when, let's say you form an opinion that you're closer to a bubble because one of these 3 things change, for example, then you can tweak your asset allocation. There is a lot of work involved, but then investing is, it cannot be completely, you have to be thoda bahut involved, and you have to understand why some things are doing well and some things are not doing well. So I would say that if you're an SIP in 4 or 5 categories, you should worry much lesser than if you are SIP in only one category, जो कि बहुत ज़्यादा exposed है global risk से, या बहुत ज़्यादा exposed है liquidity risk से, तो then you need to be little bit more careful.
So it cannot be just a one-way equity street going forward. There has to be a mix of other asset classes as well. Do you mean that?
Yeah, apart from equity, obviously you need to have asset classes. So, for example, एक बहुत ही अच्छी category है balanced advantage funds.
Okay.
So, in balanced advantage funds, what we do as an industry, and
Mm-hmm.
we also have a balanced advantage
Okay.
fund which has
Okay.
done well, is that you dynamically change the allocation between equity and debt based on the market levels, based on the valuation levels. So that way, I am doing that job for you. What I was talking about earlier.
Yeah.
That if the valuation goes very high, I will go to 30% equity.
Okay.
If the correction happens like in the time of COVID, I went to 75% equity. So I am changing that equity allocation between 30 to 80%.
Okay.
So that's a wide range.
Okay.
So there are products like that. So suppose you think that you're not able to understand so many complicated things which are moving the market, which is fair, and you are also busy in your job and so on. So सबके पास bandwidth नहीं है. So there are products like that. So you make that part of your SIP.
Okay.
And not just follow the SIP only in the high return categories. Because that is where the volatility is. See, no high return comes without higher risk.
True.
That is the ultimate truth.
Correct.
So you have to manage the risk basically, and how much risk you can handle as a person.
Wonderful. Yeah. So anybody who doesn't understand, how the whole allocation should work, I think your balance advantage fund would be a savior for them.
It would be it's a great savior. It's a great category. It has done well, and I think it's got a lot of potential.
Yeah. So Rahul, just coming to question on Tata Mutual Fund. So your AUM size is around 1.4 lakh crores now. So what has been the investment philosophy for Tatas? Because anything which comes from the house of Tatas, there is a trust element attached to that. So how Tata Mutual Fund is different in this case?
Yes, I think we do two things on the equity and debt side. I manage the equity side. So equity side pe we follow a philosophy called growth at reasonable price.
Okay.
So we are, I won't say we are deep value investors, but we are valuation disciplined investors. There's a difference.
Okay.
So we have a framework as to हम growth at reasonable price जिसको GARP बोलते हैं. How we define GARP. And we have categories within GARP which we follow and construct all our portfolios using that. So for example, अगर आप balance advantage fund में हैं, तो आपकी स्टेबिलिटी फैक्टर रहेंगी और गार्प फैक्टर्स रहेंगी. अगर आप एग्रेसिव फंड्स में जैसे स्मॉल कैप फंड में वहाँ ज़्यादा गार्प रहेगा और स्टेबिलिटी कम रहेगा. बट गार्प इज द ओवरऑल ग्रोथ एट रीजनेबल प्राइस इज द ओवरऑल फिलॉसफी. Again, the logic there is that it's an all season philosophy. कभी कभी क्या होता है कि when interest rates are down, growth stocks will do well, and you will keep hearing this talk.
Yes.
It's little confusing for everyone, but it होता है. And then when the interest rates went up, value as a theme did well. But what we focus on is not just value for the sake of value, but value के बाद आपको क्या triggers दिख रहे हैं. So what is it that you can get out of the value? Why can a company which is today valued less, how can it change?
Okay.
So we try and identify those opportunities where re-rating can happen, जहाँ valuation बढ़ सकती है, growth भी आ सकती है वापस. और समझिए अगर कोई जैसे large and mid cap हमारा portfolio है, which is our one of the main funds. उसमें हम 50% stability stocks रखते हैं जो कि हमें annual compounding दे सकें. और जो बाकी 50% है वो हम गार्प वाले जैसे कैंडिडेट्स रखते हैं जहाँ पे हमें री-रेटिंग एज वेल एज ग्रोथ बेनिफिट वी कैन गेट. सो लाइक दैट एवरी स्कीम वी पुट अ मिक्स ऑफ स्टेबिलिटी एंड गार्प डिपेंडिंग अपॉन व्हाट इज द रिस्क प्रोफाइल ऑफ दैट फंड. एंड देन सो वी हैव that as a metric, then we follow that. So that is one thing which we do. Also in the debt side we have a similar approach, which I don't manage, but we have a similar approach where I think safety, liquidity and returns are the main focus. But there also our approach is to have stable returns and not very high returns is the first option. So what you said about the name having a lot of trust,
yeah.
but we also have to earn it. हम
Yes.
केवल नाम we cannot just say that because we have that name we should automatically get that trust.
Correct.
We also have to earn it.
Yes.
Nobody is not a guaranteed thing
Yeah.
for us.
Yeah.
And therefore we should never forget, and therefore it has been a lot of parallel work in terms of our performance and portfolio also to earn that trust, rather than just saying ki bhai
We are from the
should
house of,
we should
yeah.
automatically get
Yeah.
trust. It does not work. It does not work like that.
Okay.
We do get benefit. We do get the initial benefit, but then we have to keep doing things consistently to keep earning that initial trust benefit, which we definitely get. There is no doubt. But nobody gives you too much room if you don't do things well.
Yeah.
Then it does not matter.
Agreed. Yeah. So Rahul, there's been a lot of questions, or there's been a lot of debate around active versus passive funds. Somebody who wants to chase alpha, who wants to beat markets, want to earn a higher return, they always prefer active funds. But of late, there's been a lot of growth or traction being seen on the passive investing side as well. So, which school of thought you belong to, or what's your view on that?
See, I am an active fund manager, so I will obviously favor active. But a simple thing is that we are in a market where economy is becoming broad-based.
Yeah.
पहले economy में certain parts were not doing well, like manufacturing investment. Now they are doing well. So from a single engine economy, you're going to a two engine economy or three engine economy. So obviously markets will become wider.
Okay.
और markets जब wide होते हैं, wide होने का मतलब है small mid, you get more opportunities in small mid also. Then actives will do well.
Okay.
At least not every active will do well. You have to still do your job well. But chances of active doing well are so much brighter.
Okay.
And that has happened. I don't know, if you do a simple analysis last 2-3 years, you will see that so many active funds have outperformed benchmarks by a huge margin. Huge margin. So one has to look at passive in the context that, okay, you can replace some large cap allocation with passive. But as soon as you come to mid, small, diversified categories, I think as an economy, if whatever we spoke about initial, the first part, as an economy, we are going to do so well. There is no way passives can compete with active at a broader level.
Okay.
One or two segments, yes.
Okay.
So I have very strong views on that. If the market, if you are into a recessional period, if you are into a slowdown period, then yes, it becomes very difficult for actives to compete with passives. But that was the period between 2014 to 18. Okay. Now we are in a completely different market. So I think I'm quite excited by that.
So you feel that the active would still outperform for next few years?
I think so. I think so. Next 3 to 5 years look very, very interesting. Also, remember that with interest rates being moderately high, not very high, but moderately high, valuation discipline will also play a role.
Okay.
In passive, what happens is that the expensive keeps getting expensive. I mean, there is a bias, there's a momentum bias, or there is a bias. It's like following the crowd. Whereas in active, you can take certain calls much earlier than passive, either based on the fundamental changes in the economy or based on valuation.
Okay.
So I think that is where the opportunity is.
So one should play more on the active mutual fund side, not on the ETF side.
That is my view.
Okay.
That is my view, definitely. I think everyone is entitled to their view. That is my view, and except for one or two segments. And also in passive, I think there are some interesting segments of passive where one should have an open mind on. These are like the smart beta products.
Okay.
जैसे हमारा एक product है Nifty mid cap 150 momentum 50. So you buy the most high momentum score stocks within the mid caps.
Okay.
That has done phenomenally well.
Okay.
But वो एकदम niche and very focused passive it is. It is not a Nifty passive or a Sensex passive.
Okay.
It's a not customized, but it's a constructed passive with momentum as the focus.
Oh,
So
okay.
people who want to have momentum in their portfolios can buy that passive.
Okay.
And that has outperformed the mid-cap index hugely in the last 1.5 years since its launch.
Okay.
So those are interesting products which I am still positive on. Because that's different. You're trying to do something different. But not as a general plain vanilla passive.
So Rahul, I'll come to about the Indian economy side. See, we are doing phenomenally well now. So how do you see our economy doing till 2030? Where do you see we stand in terms of our ranking, in terms of whether we'll be number 3, number 4, and how the difference between the Chinese economy and ours is almost 4 times now. So how much we'll be able to bridge this gap going forward? Anyways, we have beaten China in terms of population, right?
Yeah.
So in other parameters, how do you see in next 6-7 years?
It is still, I would say, still some time.
Okay.
China is 15-20 years ahead in a lot of areas, in manufacturing areas, if not more. So we just started. So I generally don't like to think in terms of where we'll be in 2030. I think the good thing about, I just constrain myself to things which concern me. And from what I can see, the kind of changes which we mentioned happening in the economy, it's very exciting. Where it takes us to 5 trillion or 6 trillion by 2030, whether it will be second, third, fourth, I think those are secondary questions, better for newspaper headlines. I'm more focused on where are the opportunities, where is the valuation, where can we make money, and that is what keeps me more excited than trying to give very big picture. Targets or
nice. So that's how the fund manager should be, right? Always on the hunt.
Yes, look at macros, but end of the day, that macros have to translate into
the
outcomes at company level or stock level or industry level.
Yes,
that is how we earn our
livelihood.
Salary.
Yeah. So we have discussed a broad range, right, from economy to your mutual fund philosophy, how a retail investor should look into this, look into mutual fund investing. So how, say, if you have to give three, four pointers for anyone who wants to start investing in mutual funds from a retail perspective, what those 3-4 pointers should be?
So I think the first pointer is don't try to time it.
Okay.
Start even if it's a small amount.
Okay.
If you are knowledgeable enough to realize that valuations are very high, still start with just smaller amount than what your eventual target is.
Yeah, don't be a fence-sitter.
Yeah, don't be a fence-sitter. Okay. Unless you start, you will not learn. And so don't try to time it too much.
Okay.
Reduce your size. If you still want to time it, reduce your size.
Okay.
Second is that diversify, like I said earlier. I think that's very important. I think I've seen a lot of investors just putting everything in one. So I think that knowledge is important, that there are various categories. There are categories which protect you from capital, protect your capital also and give you returns. There are funds which don't promise you anything, but they can give you very high returns. You have to have all types of equity funds, apart from having the debt allocation, equity allocation. I think these are the two most important things, I would say.
Yeah, great. So let's try to understand something on your personal side, right? So Rahul Singh as CIO and Rahul Singh who is not into the market. So how you spend time on your vacations, holidays? What are your hobbies?
I generally try to do things which are more physical and outdoor.
Okay.
So I'm into running and swimming.
Okay.
Like to play more sports, but then I need to find more time for it.
Yeah.
So any sport needs a lot of time, which I'm not able to, I guess, give at this point of time. I don't carry work at home generally. once I'm at home. It's unless some crisis happens, then you have to obviously take a few calls. But as far as possible, not carry, because it's very important to also detach. If you get too attached, sometimes you also end up reacting to news rather than being proactive. So it's very important to have a good balance between being attached to the markets and being detached at the same time. It's very difficult to achieve, but I think it's important. Then obviously, how do you manage your time during the day? Because as there is information overload today in the market. There's too much information through social media, through emails, through WhatsApp, and therefore, how do you make sure that these 2 hours I am going to devote only to reading on companies? I think that is a very important part of my day. We can't do it every day, but I think at least as far as you have that in the back of your mind, you try to manage your time accordingly. So yeah, I think the trick is to, as I said, be relaxed, be detached when everyone is kind of panicking. Because we've seen enough in this market to know that nothing is permanent. Once sometimes you react, you end up losing that opportunity.
True.
Both on negative or positive. So therefore, to remain balanced is very, very difficult. But one
should always strive for that.
One should try to be.
Wonderful. So even for our listeners who are not investors but traders, it's very important to detach yourself when you are not in markets, or control your emotions where things are going wrong. So those are the key things which you can always learn from Rahul. So you love reading, Rahul?
Not so much. I don't. I'm not a good reader actually. I would like to read many books, which are piling up on my table. But
there are a lot of balance sheets to read.
I'm not a good reader actually, and I don't like it because I come across people who are very well read, and I feel that that's one part which I have not kind of paid enough, given enough time for. But it's okay. I'll catch up.
Wonderful. So it was wonderful discussing with Rahul about various topics, about economy, about mutual funds, about how to diversify and allocate your funds. And we also heard from him that he is a person who loves playing sports, who is more of an outdoor person, who loves running. So it was a wonderful discussion, Rahul. It's a pleasure again to have you in our studio. Hope to catch you soon again. Thank you so much.
Thank you very much. Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.